Hey everybody, what is up? Welcome back to Final Trade. I did a video several weeks ago about returns from Pokemon sets from about 2011 through 2018, and I showed that, on average, the compound annual growth rate of Pokemon sealed booster boxes over that time period up until today was around 20s, 30s. Some of them got into 40% compound annual growth rates. And so I had a patron ask me to do this same kind of analysis for standard Magic sets. So I've done standard and I've added in core sets. And I've gone all the way back to Invasion in October of 2020. So just kind of an arbitrary date to go back, Before that, you start to eventually run into sets that still had reserve list cards. So I've assumed a basis of $90. Yeah, that's not exactly correct for the entire time period. It depends on if you're a card store, if you're good friends with a card store owner, if you're just buying on the open market, if you're paying sales tax or not. A lot of things kind of vary about whether or not you'll pay $90. And of course, prices increase over time. So these are prices taken off of TCG Player on November 2nd. Not that that's going to make a huge difference because some of the durations here are literally 22 years. And I have assumed that you'll have a selling fee of 12.5%. So what I came up with is the lower of the market or the lowest listed price on TCG Player. And I didn't split a lot of hairs over which market price or whatever. I'm just looking to kind of get a broad snapshot of this. And then I computed the compound annual growth rate from a basis of 90 up to this current sales or market price. And then I also assumed that you would have a 12.5% fee for selling it. And I said, well, what's the compound annual growth rate? And the thing to understand is this differs from return on investment. Return on investment would be, let's say I paid $100 for something and any amount of time in the future I sold it for $500, my return on investment would have been 400%. But compound annual growth rate takes time into effect. So it says, what is the amount of growth level line that I would have had to have every year in order to get to this current box price over the time period in between the release day and the day I was recording these data. And so, of course, to kind of be a little more pessimistic on this analysis, I used release date. And the reality is, most of these products, certainly all the standard set products themselves, have print lives of about 2 years. It's typically more like 18 to 20 months. And core sets, long ago, they were every other year. And so they had similar print lives of 18 to 20 months. Nowadays, core sets, up until the point where they discontinued them again, core sets were 1 year products. So they would have print lives of 9 months. But getting into the actual returns, what we see is on average for all these sets, and I believe it's about 75 sets over the course of almost 20 years, the average return was 12.7% compound annual growth rate. Now, that's just a simple average of all of the individual CAGRs. And so you can see going back to these early 2000 sets, a lot of these kind of beat the long-term stock market. The number that people will typically throw out for long-term S&P 500 compound annual growth rates, and it depends on how you account for fees and whether or not you include dividends and reinvestment of them and things like this. But typical numbers people will throw around are 8 or 10 or 12% compound annual growth rate, just depending on the assumptions you make for the S&P 500. And so what you can see is that most of these sets going back up until even about the 2010 period, most of them beat that even 12%. And some blew it out of the water, World Wake. So, and then you get into this period here, and it's interesting, I've highlighted the CAGRs of them. You get into this period from 2012 to 2016, this 4-year period, and man, the returns on all the products are a lot lower there. So, definitely a rough spot of unloved sets, bad decisions at WotC. And it's really crazy that the most expensive box out of this period, returning 12% compound annual growth rate, you can go buy that most expensive box now for around $230. And it's a 7-year-old box. So really poor returns in this era, but then it kind of recovered. And I only ran this analysis out to Throne of Eldraine because you you kind of run into a problem, and even Throne of Eldraine probably has that problem, where the set is still too new. Throne of Eldraine has only been out of print for about 15 months, and there are still too many boxes bouncing around. I was working on another video this morning talking about how boxes available is a weak indicator of future price swings, and I was using Throne of Eldraine as the example. And one of the pieces of data for that analysis was that over the previous 4 months, from today backwards, Throne of Eldraine has sold something like 220 boxes on TCG Player in the last 120 days. So even 15 months out of print, it's still selling 2 boxes a day just on TCG Player. And so, arguably when you get forward in time here, it's really hard to draw many conclusions from these later data points. And so then lastly, I just plotted the CAGRs themselves against the release date of the products, and you can see that big dip here for about 4 years. And so what kind of conclusions should we draw from this? It's an interesting question. What are the long-term returns of standard Magic sets? And well, they beat the S&P 500 by a bit, and that's when you factor in that this analysis assumes you bought on the absolute worst day to buy, you bought on release day, so you tied up your money as early as possible, and it assumes this 12.5% selling fee, so it really includes the cost to get out of the investment one day. So I'm not leaving that hanging out there saying, well, it's still worth some amount more, but in reality, you would have to pay more to get out of it. No, I've accounted for that, and the conclusion is, on average, you're going to have about 12.5 or better percent compound annual growth rate on Magic standard boxes. And of course, the thing people will always split hairs over is, will this continue into the future? Are we in the new junk wax era, etc.? Are we all falling for a fallacy that we're getting a free lunch by investing in these boxes? Well, no. Investing in these boxes is difficult. You have to take physical delivery. You have to store them. Your house can burn down. It can flood. You can get hit by a tornado. You can get ripped off when you go to sell them, depending on how you're selling them. So there are all kinds of risks involved in this investment that really do not make it a free lunch. Yes, the return is good, but the return reflects the level of risk. That's what markets do. So I think it's a reasonable conclusion. Now, I went and tried to run this same analysis for master sets and modern sets, and it was a lot more difficult because the wholesale pricing was all over the place over time. Yes, a lot of those modern sets have had MSRPs, but they commonly didn't sell at that. So I had a real hard time coming up with what should the assumed basis cost be. If any of you guys have ideas for that, let me know in the comments and I can kind of complete that analysis, maybe make another video for it. But I was not able to draw any conclusions because I really wasn't able to calculate compound annual growth rates for those. So, I think that standard Magic sets, yes, they are investable. They're worth investing in. Will there be a time when this 4-year period here kind of snaps back in line? That's an interesting question. You would kind of think that on the long timeline, and we're going to talk preposterously long timeline, let's say 30 years, I would kind of expect it to start getting back in line. I don't expect that on the hyper long timeline, these will continue to have such poor performance compared to everything else. And the reason is that opening alligator mouth, that over time the value of the sealed box diverges from the value of the cards inside of it by virtue that the sealed box itself is the collectible in that case. And so at some point, you would think that these would start to close the gap, close that distortion between their current CAGRs that they've seen since release and the CAGRs of other products before and after them. So on a very long timeline, I would expect these to kind of come more in line with the rest. But when will that happen, man? Who knows? It's not really something I'm interested in betting on. I'm not interested in running out and buying one of each of these boxes because I think they've lagged the market for too long and they'll eventually catch up. I think there are better investments out there right now. Let other people chase that. But on a very, very long timeline, I think they would have some kind of recovery, maybe not a complete recovery. So let me know what you think about that. I'm actually interested in what y'all's opinions are on that. But there you have it. Standard sets and core sets from Magic, not as good of a return as Pokemon. And, you need to kind of allocate your money accordingly, depending on what kind of business you're trying to run, what kind of investments you're making, what you like, whether you hoard some of these boxes to potentially open them yourself as a treat in the future. Think about all those kind of things and decide how to balance your risk. I would not suggest going 100% into Pokemon, but that concentrates too much risk in one place. And one last interesting thing, you can kind of look through a lot of these sets. So 8th edition has a 12% return, and 9th edition 13%. But as we get out here further, core sets kind of fell off in popularity, and they have worse and worse returns. And I wonder why that is. Is it when they went to core sets every year, they start to really lag the sets around them? And I wonder if it's just a result of trying to cram a core set in every year and essentially too many of the cards getting reprinted too often. So it's another thing I'd be curious to hear y'all's opinions about. So let me know what you think, guys. Other analyses you'd like to see, other weird questions you have, any insightful things you could point out about this one. Otherwise, like, comment, share, and subscribe. Join me on Final Trade. Thanks a lot, guys.